What's up, traders? Welcome back to another video. Today actually I'm going to combine Monday's trade and Tuesday's trades, and we'll see how different they were. So this is Monday, a trade that I took on gold. As you can see, this was the previous day's high, this was the previous day's low. Now, Monday being day one, I usually associate Monday being a day one continuation because, well, I don't have any proof yet, but over the years that I've been trading, I've noticed that Mondays usually have a trending day. So my buyers coming to the screen on Monday was that since this is a creeping trend, I am going to, find a trade that is in line with the trend. And so I waited for, the first hour of the New York session sets the high of the session and the low of the session. Now, when you look at this, this looks like a pretty good pump to the high. Now, only time tells if it's a nice pump and dump. So, but I also had my 20 moving average indicator because I had that bias that, well, this was a trend, this was a continuation. So I was looking for what is it called? A confirmation. Now, when you look at this setup, for the pump and dump setup to be valid for me, we must come back to the high of the session, or we go to the low of the session, where we can now look for a setup. But what happened? The market came down one. So the market came down to the double zeros, and then this, for me, I'm expecting this market to go back to the high of the session. Now, there are certain candle structures that usually give me a hint that we are going up. For example, look at this bearish, what is it called? This is a hanging man, or I don't know. I don't remember the name exactly, but let me show you which one. This one. This candle formation tells me that we are going higher. When you start seeing candle formations like this, in my mind I am thinking we are going higher. We have not exhausted the buying volume yet. So that is what I was actually looking for. And as you can see, the market came to the double zeros and then an engulfment. Remember, this market, this is a pump and dump setup, but for me on Monday I was trying something new. After the market broke structure with this engulfment, I'm looking for a retest. And then I'm looking for either an engulfment or a formation, a pin that, a bullish pin that looks like this. Now, as you can see, this is where I entered at this bullish pin. This bullish pin. And I got 25 pips, 27 pips. Now, when this is just a scalp, by the way, this is just a scalp. When I see this pin at the high of the session, I'm out. I'm done and dusted. That's it. Now, when I see a pin, a bullish pin like this at the high of the session, I know that market is going to break out. That is something that I have observed over time. So Monday gave me 25 pips, simple scalp, something new. Yeah, but eventually people who wanted to trade the pump and dump, because they came back to the high, they broke structure, retested, and this was the engulfment at 9.55, and it went down. So this is where my usual entry would have been, at this engulfment, for 50 pips, which it gave, although it went past the hours, the trading hours. It still gave people a chance to get 50 pips, no problem. So Monday was me trying something new, and it went well, although my primary setup is the pump and dump. Now let's look at a trade I took yesterday on Nasdaq. So usual process is the same. We plot our high of the day, low of the day. So this is our low of the day. This is our high of the day, as prior to the New York market open. Now, the first hour sets the high of the session and the low of the session. Now, we remember we are selling high, buying low. That is the strategy. Selling high, buying low. Now, as you can see, the first hour sets the high of the session. The second hour comes back to the high of the session, gives us an M pattern. M pattern, and then breaks structure. So upon retest, we are looking for an engulfment. So the engulfment came at 9:45, but it was a 25 pip engulfment. So when you see a very big candle like this one, know that the market will go back at least 50%. Most of the time it will go 50%. But yeah, so entry 50% of that candle to be on the safe side. Or if you're like me, well, yesterday I had a bigger stop loss, around 32 pips. But yeah, it was a nice trade. Gave people around 100 pips, but I was satisfied with my 50 pips. So trading is the same thing over and over and over again. When you know what you are looking for in the market, it becomes so easy. I hope you see that there's nothing exciting unless you are trying something new, trying to improve or trying to add more setups into your playbook. So hopefully you got value from today's video. Make sure you like, make sure you subscribe. It helps with the algorithm. Also stay disciplined, stay focused. And as TC Back says, may the markets go with you or stay with you. Yeah, have a nice day.